RBI Governor Shaktikanta said today that the country's economy is likely to contract 9.5% in the current financial year while maintaining a status quo on policy rates, citing high inflation. The GDP may break out of the coronavirus-induced contraction and turn positive by the fourth quarter of 2020, according to the governor. The newly constituted Monetary Policy Committee, or the MPC, of the Reserve Bank of India has announced its monetary policy decision after 3 days of deliberations. The new Monetary Policy Committee has voted unanimously and the rates remain unchanged. The repo rate remains unchanged at 4%. The governor also reiterated the RBI stance is accommodative for as long as needed.
The MPC evaluated the domestic and global macroeconomic financial conditions and voted unanimously to leave the policy repo rate unchanged at 4%. The MPC also decided to continue with the accommodative stance of monetary policy as long as necessary, at least through the current financial year and into the next year, to revive growth on a durable basis and mitigate the impact of COVID-19 while ensuring that inflation remains within the target going forward. By all indications, the deep contractions of Q1 2021 are behind us. Silver linings are visible in the flattening of the active caseload curve across the country. Barring the incidence of a second wave, India stands poised to shrug off the deathly grip of the virus and renew its tryst with pre-COVID growth trajectory. These expectations are also reflected in our growth projections, which suggest that GDP growth may break out of contraction and turn positive by Q4.
Well, in today's monetary policy, the RBI kept the key lending rates unchanged. Now, that is because the current inflation is quite high. So, looking at the inflation target, the RBI kept the key lending rates unchanged. However, the key points in the entire RBI monetary policy announcement was about the inflation that the RBI governor says that the inflation that he expects for the end of this quarter to come down within its RBI's target, which is of 4%. Now, remember, currently the inflation is 6.6%, and the RBI governor expects that even for the month of September, that is what is expected. But by the end of this quarter, the inflation can come down within the RBI's target of 4%. As far as the growth is concerned, well, for the first time since the pandemic began, the RBI has given a growth target. And for the entire financial year, the RBI expects the growth to contract and it can decline by 9.5%. That is the growth that the RBI sees for the entire financial year. However, the RBI also in its commentary said that for the fourth quarter, the quarterly GDP for the fourth quarter this financial year can turn into the positive range. Now, remember, currently the growth is contracted, it is in the negative, but the RBI expects that for the fourth quarter the GDP can be positive. But for the overall financial year, he says that the growth will contract by 9.5%. Now, along with that, the RBI also said that they are seeing some positives as well, be it the manufacturing, and there are certain sectors like agriculture, consumer durables, where he believes that going forward the demand can come back, and these are the sectors that can have a good impact on ground. But he also says that in fact even the global economy is improving. But for this current financial year, the GDP growth is negative and it's going to remain negative. However, for the next financial year, the GDP can improve. So these are certain key points that the RBI highlighted, and also has said that the RBI will keep its focus on boosting liquidity in the system and also announce certain measures for boosting the liquidity in the system.